Hey everybody, happy Monday. Is it Monday? It's Monday. I want to talk to you about a lot of things. I got a lot of things on my mind. Happy to see you. Glad for you to be here. Hope you're safe. Hope you're healthy. Hope your family's well. Hope you're hanging in there throughout all these repeated opening ups and shuttings down and whatever else. There's one truth about life that I keep coming back to over and over and over again lately. It's that as bad as things get, they get better again, and as good as things get, you got to even it out with the reality that things kind of the phases of life and the cycles of life go up and down, and you got to even all that out. And it's another way of saying that things are never really as bad as you think they are, or there's always some kind of silver lining, and then things are never really as good as you think they are either. And being unrealistic about the highs and the lows can lead to a lot of disappointment. And that truth carries over into trading as well. And we're seeing some of this finally play out. And today I wanted to talk about one truth about trading that is incontrovertible. I learned that word, actually, incontrovertible, from Pink Floyd, The Wall. Remember that? I don't know if you ever saw that movie. I didn't particularly enjoy the movie, although Pink Floyd's one of the all-time great bands. I probably listened to Dark Side of the Moon 750 million times. There's one truth about trading. If you look at, let's take a look at Zoom. Like, we'll take a look at Zoom right now. And Zoom was a rocket ship. And it doesn't matter what one you look at. It doesn't matter if you look at Zoom or if you look at, it doesn't really matter. You look at Amazon, you look at Zoom. But Zoom's been on my mind lately, and I've taken a lot of heat for this. And I feel like one of those athletes that wins the world championship and says, no one ever believed in me and no one thought I could do it and whatever else. But eventually the truth comes out, and eventually the incontrovertible truth that in order to justify its price of its stock, a company must produce earnings. The stock price, as evidenced by investors bidding it up, is simply a bet that the company will in the future produce earnings to justify said price. And in the short term, people go absolutely bananas. They go absolutely out of their minds, and they bid stocks up because there is this belief that there is infinite possibility, and that's like that's the honeymoon phase of a stock like Zoom or a lot of other ones. And I'm not dumping on that idea. And there's a lot of money to be made in that trend. There's a ton of money to be made in that trend. But the biggest amount of money and the wealthiest people in the world are able to even out that euphoria. They're able to consider that moving up of the stock price and incorporate into it the fuller picture, the bigger picture, that eventually things return to their natural state. People return to their natural state. Stocks return to their natural state. Companies that don't produce enough earnings to justify stock price, those stocks eventually fall. And the reverse is also true. I mean, listen, I'm not a giant airline stocks guy, but the airlines dropped significantly. This Spirit Airlines, I don't give a crap about Spirit Airlines. I don't care about Delta Air. I don't care about any of these airlines. I mean, but these companies fell out of, like, they just cratered on the China virus news, and then the fear became excessive in the same way that things weren't really as bad as traders were suggesting things were, and things recovered. Wayfair, what a great example of a company that is just a giant piece of garbage, financially speaking, but it went too far down, and then it rose 700% from there or more. And now it's at these preposterously high levels, and it must come back down. That there is this truth about the market that reversion to the mean is a real thing in life and in the markets. If you're just joining now, why do you never show up on time? Just kidding. No, I'm happy to have you here. I love you. I'm so happy you're here. What we're talking about today is this idea that as good as things look like they are for something like Pinduoduo, this company which is forming on the 60-minute chart what is clearly and fairly obviously a head and shoulders pattern at the end of a trend, shoulder, head, shoulder. Clearly, to me anyway, and this is a company with $11 billion in annual losses, a market capitalization of what? $59 billion, earnings per share of negative $1.13. How do you justify, and I'm not just arguing with it, I'm not like an old man saying, get off my lawn. I'm saying that, listen, you do not have to tolerate intolerable behavior by this stock. You can say, I'll sit back, I'll let the trend play out, I'll let people get euphoric about it, I'll watch this thing, I'm gonna stay on the sidelines, and then when things are right, I'm gonna let it rip. I'm gonna let it just rip. I'm gonna let this thing, the future earnings of this company are negative. They're not even positive. There are no future positive earnings for this company. It's an unjustifiable price if a stock's price is supposed to be a representation of what people think the company will make in the future. And a company that makes $0 and has no prospects for doing better must fall. But a company like Delta Airlines, and I hate to use the airlines as an example, sometimes things fall too far. And so the stock price gets so deeply depressed that its future earnings are better than what investors think. And you have to start thinking about what the fair value of a financial instrument is. And so one of those, my friend Mike Bernick is somewhat famous. My friend Brian Shannon of Alpha Trends is somewhat famous for using like the volume weighted average price. Or Scott Welsh and I for years used the 800 period Bollinger Bands. Nobody uses that. And the middle band is fair value. And it doesn't matter what time frame chart you're on. It doesn't matter. You can get into all those conversations and you can make it more difficult than it really is. But that's the things. The people who make the most amount of money aren't doing stuff most of the time. Most of the time they're just right. They're just sitting on their hands. They just sit down on their hands and they wait. And they make a list of stocks that are, my favorite thing to look for, and I'm writing a book about it now, the book is called How to Find and Trade Dumpster Fire Garbage Stocks. I even have a list of them here in TradingView. I love this computer. Microsoft. I love you, Microsoft. Microsoft should be a sponsor. Today's episode is sponsored by Microsoft. Buy a Microsoft computer. Then you can touch it. Touch it with your fingers. Garbage stocks. These are garbage stocks. They don't some of them are left over on this list and shouldn't be here anymore. But DocuSign. DocuSign doesn't make enough money to justify this stock price. They don't make it a $34 billion company with earnings per share of negative $1.17. Do you really think that many people want to open their email and sign stuff? I mean, at some point in time, this is excessive. At some point in time, this is excessive. It's my favorite company in the world. It's my favorite. This is the greatest car ever made. But at some point in time, you gotta just go. You gotta say, well, the future earnings of Tesla can't possibly justify this, even including the short squeeze, even including the inclusion into the S&P 500 or whatever. Even with all of that, it's not justifiable. Let's even look at NVIDIA. At some point in time, even these companies that are trending like this, at some point, as good as these companies are, they can't produce enough future earnings to justify this price. I don't know what Amazon's up to today. It's, getting walloped. And you might say, well, it's the whatever and the whatever, and then someone says, well, it's the number of rising cases of the China, whatever. We had rising cases for a while. It's just eventually smart money just starts pulling out. It's like, listen, Amazon's a wonderful company, although I wouldn't work for Amazon. I wouldn't. I mean, I would do it if I had to do it to support my family. I would do anything. I'd scoop garbage to support my family. So would you probably. But at some point in time, Amazon can't put off having to produce a much more significant amount of earnings than this. I mean, what's Amazon's PE ratio? 152. That's just too high. Like statistically speaking, that's too high. Statistically, like historically, like what is often true historically is often true in the future. They say past performance is no indication of future results. Yeah, it is. I mean, you can't say that it is. Someone's past behavior is an indication of their future behavior. Angry, bitter, vengeful people turn out to be eventually angry, bitter, vengeful people. Kind-hearted, loving people turn out to be, in the future, kind-hearted, loving people. And no one, even the worst person, can be reduced to something so simple. We all go through up and down periods, and you got to be forgiving. So you gotta step back. I mean, Square, great company, well, probably the best run, probably the best CEO in tech. Jack Dorsey, he's the modern day Steve Jobs. But at some point in time, Square can't produce enough earnings to justify a price to earnings ratio of 212. It can't do it. Eventually, it's got to come back. Eventually, it's got to revert to its natural state. Eventually, it's got to come back down to its volume weighted yearly average price, or halfway the distance to it, which would be, in this case, $97. It's not convenient. It's sad for the people who bought with the trend. I don't want anybody to get hurt. I don't want that. Wingstop, I don't know anything about Wingstop, but is Wingstop justifiable at 186 PE ratio? No, it's not. It's not. And the same goes in reverse. Some of you are familiar that I'm a big fan of the magic formula investing scenario. So you might look at magic formula investing. These are companies that you just look it up. I'm not going to get deep in, but eventually these companies drop, like AMC Networks. AMC produces a lot of free cash flow. AMC Networks, Breaking Bad, right, Mad Men and whatnot. The movie theater chain, the movie theater chain is probably getting just decimated. Yeah. And rightly so. But AMC Networks, this has a ton of free cash flow. A ton. And it's bullish divergent. It's got bullish profit circles. It's deep. Like, this is a company long-term that spits out cash. Like, tons of it. Do you think that it ought to be this far down? Probably not. Because it produces money. Weight Watchers International, right? Drops, it craters, and it's going to recover. These are all magic formula investing stocks. When these stocks go down, these are companies that produce a pretty significant amount of cash flow or return on equity. AbbVie, pharmaceutical company, drops in the China virus. This is a company which, when it drops like this, it's a sign. This is a company that produces money. Is it justifiable that it fell that far? No. This company can actually produce money. It's got a 17 PE ratio, market cap of 172 billion. It's lovely. It's a lovely company. I'm a fan of some of the television networks and stuff. I'm a fan of companies that spit off like tons of free cash flow. And when these companies drop, when these companies crater or go into the hole, these are companies that over the long run, they got to have earnings, they got to have an actual PE ratio, they got to spit off cash flow. But PennyMac Financial Services with a PE ratio of 5 dropping to $14, that doesn't make any sense. It's a company that just throws off cash. These are companies like AMC Networks. I think we'll be talking about this in a year, if I can even remember that I talked about it. Mark my words. It goes both ways, right? This is how it goes. People, the fear takes over, the stock falls apart, the company actually is spitting out cash like an ATM machine for investors. I'm not encouraging you to buy or sell any financial instrument. I'm not a professional. You should never do anything that I say. I'm a totally imperfect individual. I'm a windbag, blowhard, self-promoting, egotistical. I got all kinds of problems. Okay, so don't listen to me. But listen to this. Eventually, over time, things return to their natural state. Past performance isn't necessarily an indication of future results, but it's all we have to go on. And companies that produce cash, spit out cash flow, tend to outperform companies that do not. Companies with rising earnings tend to beat companies that don't have earnings. And so that's why today, and that's why moving forward, I mean, it's going to be a rocky ride. Here's NIO. This is an electric car company in China. It's a company that loses $11 billion a year. I don't know. I mean, it doesn't seem justifiable. What's this other one? NKLA, Nikola Corporation. It jumped so high. I mean, that's preposterous, right? That's ridiculous. It's unjustifiable. It never even got to $100 a share. Could it return there? Sure, it could. Look for stuff. Go into your charting platform. Look at the percent gap gainers. Look at them. This company. I don't know what Equilium does, but did Equilium do anything that justified it going from $3 to $27 today? No. Did WIMI do something? No. Vaxart? I don't know. Maybe Vaxart did. Maybe they are close to a vaccine. Ha! Talked about that the other day. That's pretty cool. Good for them. Good for all of you that were in that. What is Sphere 3D Corp? You think this company is worth $5.30 a share? No. I don't think you can short it, but I think this is pretty crazy. NXTC? I don't know what NextCure does. GRTS? I don't know what this company does. RCEL? I don't know what this company is. I got to change the little thing here. But some of these companies that are losing a bunch of money today, they shouldn't. Some of these companies actually produce earnings. So you could even run a scan online and you could scan for stocks that have fallen, but the companies have rising earnings or free cash flow, stuff like that. Okay, I have spent a ton of your time today. I love the heck out of you all. Thanks so much for being here together with me. Great to see you. Thanks for watching. Thanks for subscribing. Thanks for being here together with me. And I'll see you, I don't know. I'll see you around. Bye.